What I need from you guys is your time and focus from this video. Because I will be going from all the details, even the smallest things. This trading strategy can be complex in a way, but you don't have to worry because I got everything covered in this video. Before we begin with the strategy, I want to let you know that this strategy can be used in any market condition, or any trending market. This is based on what 98% of the traders don't know what happened. But today I will show you the key secret to the manipulation of a market, and we will take advantage of it. Time is money. Let's begin with the strategy. From the example above we can see a bullish engulfing candle. But the actual pattern needed for this strategy is, we need an engulfing candle that failed to push the price higher. If I could explain this again, it will be in this way. Step 1. Identify a bullish engulfing candle. Step 2. Identify that price has broken the low of the engulfing candle. Step 3. We will wait for the market to come and retest the close of the bearish candle. Now for the interesting part of the strategy. Drawing the zone. We can draw the zone in two different ways. In this example we can all see that we draw the zone from the high and low of the bearish candle, before the bullish engulfing candle. Because on the previous pattern we drew the pattern from the highs and lows of the bearish candle. On this one is slightly different. Here we draw the zone from bearish candle's high, which will be our stop loss area. Then we draw the entry zone on the close of the bearish candle. Please take your time to look at the two examples, because these rules are very important to the trading strategy. In this video I am not going to teach you how the market structure changes direction. There are a lot of video on this channel for that topic alone. To the bullish side point of view, the pattern is the same but vice versa. And you might also wondering why this kind of move is happening in the market. Is because price fooled traders with a bearish engulfing candle, so that beginner traders can believe that the market is going down. But sadly it pushed higher, while leaving them in a loss, for those traders who doesn't use stop loss, and mostly it likes to come and retest that manipulated area. To make things simple for you guys, every time you see a bearish engulfing candle that price traded higher, just know that the market has potential to come and retest. No matter the time frame. You can also use this in higher time frame as your analyses and use lower time frame to minimize the risk. Remember to draw the zone from the previous candle before the bearish engulfing candle. So on this example I just demonstrated how to draw from the low of the bullish candle, and from the close of the bullish candle. So if this is still hard to catch, you don't have to worry because I will show you some example in a chart. Then the entry area will be at the high or at the bearish candle's close. It just depends on the market conditions. So now let's move on to the examples in this video. But before we begin I want to clear this out, that there will also be a losing trade. As we all know, when you enter a trade it will close in this three different ways. 1. Close with a profit. 2. Close with a break even. 3. Close with a loss. From this example 1, we will look at this area to identify the bullish engulfing candle that failed to push the price higher. Then we will draw the zone from the bearish candle's high and low. Then that will be our entry area. See how simple it is when you understand the rules? After drawing the zone, we can see that price tried to retest the zone but it failed. Then on the second try the market returned to the zone. Now let's see how it turned out. Now you see how this failed engulfing strategy can be very effective. And the zone turned out to be very strong and price dropped very hard after that reaction from the zone. Because this is a bearish setup, our stop loss is going to be at the high of the bearish candle that we drew the zone at. And our take profit in this scenario we will target the new low as price was already bearish. On this example, I need you to pay good attention because I won't be going through this rule again. On this example with the bearish side on the strategy, we will start by looking at this area over here. We need to spot bullish engulfing candle that failed to push the price higher. Now after drawing the zone on the high and low of the bearish candle, we can see that price just dropped after retesting that area. So before I forgot on how you will enter this trades, you have to use a sell order that trigger when price returned to that area. Now this is how your trade setup will look like. And we can all see that this is a sniper entry. But what if we drew the zone from the bearish candle's open? If we drew the zone from the bearish candles open, we could have easily missed this trade. But this scenario is in two ways. It can trigger early or it can be a missed trade. So I suggest you to backtest this and see what is comfortable for your trading style. You will understand why on this example too. And as we see, this is the same trending market and it just happened to be failed twice. So firstly, we will study this chart over here. Then after we will draw the zone so that we can identify our entry zone. Now that we drew our zone on the bearish candles high and low, we will initiate our sell trade. Because we used the low of the zone. We entered too early because of that. But as you remember on example 1, that entry was a sniper. And also when you are making analysis, make sure you are on the right side of the market. What I mean is that we can see that our lower low is broken. Meaning we are still trending into the bearish side of the market. Our sell setup will look something like this. If you are an OG of this channel, I'm sure you already know that in this channel we use only the smallest stop loss with some insane entry strategies. But if you are not OG, please consider subscribing to the channel.
In our backtesting we use Trader Edge, a dynamic backtesting software that revolutionizes strategy management. This platform excels in consolidating all your strategies in one place, saving you both time and money, while providing clarity on which strategy suits the current market conditions. With features like date tracking, it keeps you motivated and organized, allowing you to monitor your backtesting progress effectively. Trader Edge also offers forward testing capabilities for real-time scenario analysis. To enhance your trading efficiency, find the link in the description.
But now on this example, we drew the zone from the high of the bearish candle and to the close of the bearish candle. After doing so, this trade shows us that we have entered too early on the previous example. But here it's a sniper entry. If this is your first time in this strategy, it might be hard, but you just have to put more time on the charts, then you will eventually improve as a trader. Now moving on to the bullish side point of view. As we see from this area over here, we just follow the same steps and rules. Step 1. Identify a bearish candle that failed to hold price to the downtrend. Step 2. Draw a zone on the previous candle's high and low. Now after drawing the zone from the high and lows of the bullish candle, we now wait for the market to come and retest the area. And then we enter using a buy limit. Stop loss being below the bullish candle's low. Or on the low of the bullish candle. And then you're done. For take profits, target the previous highs. And this strategy is very simple but yet very effective, if you follow the rules I have mentioned in the beginning of the video. Now moving on to another example. From this example over here, we can see that we are still very bullish. By just looking at the previous high over here being broken. After identifying the bullish trend, we will look for a failed bearish engulfing candle at this area. Then we will draw a zone on the highs and lows of the candle. Now that we have properly drew the zone, we can also add more confluence to our trade by adding a structure to our chart. In this case, we will be sure that we are on the right side of the market. This can be triggered in two different ways. Like as I said before, on this first example over here, we can see that I used the entry from the high of the bullish candle, meaning this is an early entry. But here on the second example is very different, because I used an entry based on the close of the bullish candle. And this trade turned out to be a sniper entry. So guys, I guess this is the end of our video. All I can say right now is keep backtesting and you will improve as a trader. I will see you on the next video. Also, don't forget to share the video on Telegram, Facebook and even WhatsApp to help other traders if this video was helpful. Also, leave a comment below to suggest any other videos that you might need.